Good evening, everyone. I believe you had a wonderful weekend. You took time to look at the charts, even as you had some time to reflect and relax as you look forward to the next week. So, always our norm, we begin by looking at DXY. So, we had analyzed, let's begin from the higher time frame. But before even we look at what transpired, let's basically, first of all, begin with the fundamentals. And last week, it was a very, very, very busy fundamentally. We had many economic events that were released. Basically, we had the CPI for USD, we had the USD, we had the federal funds rate, that is the FOMC. We had the employment change and unemployment rate for AUD, and we had basically it was central bank week. Major central banks were declaring the interest rates and the interest rate decisions, and basically we found that all of them, they maintained the interest rates. And we found that actually all these fundamentals, they were very, very, very volatile. They caused a lot of volatility in the market. And I believe that you took some advantage of those movements of the volatility to make at least a dollar or two, or maybe you stayed out of the market. Remember, if you don't have to trade the news, you can always stay off the market, especially if you fear or you don't know how to trade this news. It's always good to stay aside and watch whatever happens without trading, or probably you do it in your demo account. Okay, so having seen probably what transpired fundamentally, then we can look what happened technically. So we can begin with the dollar index. So the dollar index, we had identified this trend line in the 4-hour. We were projecting that probably we were looking at it going in the upside, that is the upside continuation. But due to fundamental, the market did not respect this trend line. The price did not respect the trend line. And the reason why we had this downward movement, and then we have a retracement at this level. Okay, we had a retracement at this retracement, right? So what we are looking at the moment, the price already retested this supply area. There is a supply area in the 4-hour time frame. There was a retest already. This was the retest and the reason why there was the selling. And now it's coming here for the second time. So we don't know what might happen. Probably the price might go through, might break through this demand, this supply area, or there might be another rejection on the downwards. So let's basically maybe look at, but probably what I'm expecting, my own view, when you go to the daily time frame, when you come to the daily time frame, we have this trend line, not really the trend line here, or not even the trend line, but first of all, we have this supply area. Okay, so let me delete all this so that I can draw again. Okay, so it can become easier. So from the daily time frame, we had the supply area here that was also tested. Okay, so that was tested. Also, we have a fair value gap. Okay, so these are fair value gap. So the price, I'm anticipating maybe the price to come to this fair value gap and then maybe push on the downside. Okay, maybe push slightly on the downside. If it goes up, then we'll be waiting for the price at this area. Okay, that is the DXY in the daily time frame at around 104, 104 to 90, and then we'll be looking, because at this level we have an area of resistance. Actually, we have an area of resistance. All this is an area of resistance. Okay, all that, it's an area of resistance. Then we might see the price reach here and then push downwards, because what we have here at the moment is a series of lower lows and lower highs. Okay, you can see that. Then also From this, we have that trend line. Okay, we have the trend line. We have that trend line. So we probably might anticipate the price maybe to reach here. The reason I'm talking about this fair value gap. Then we see maybe the price push downwards as well as it is respecting this downtrend line. Okay, so if there is a rejection or if there is a breakout on the upside, then we'll be looking at 104 on 104.50, and then we look at the next level will be around 105. Okay, around 105. But on the downside, if it respect this fair value gap and the trend line, then we'll be looking at 101, where the price was 117.794, and then we'll be looking the next level that we want to see the DXY probably reach is around 100.50, and then maybe around this level. That is if it continues on the downside. Okay, so the next thing that we need to look at is gold. Okay, we look at gold. So with gold, basically this is what we have. Let me delete. We had the upward movement that was caused by FOMC. Okay, by FOMC, that is on Wednesday. This is the Friday, Tuesday, Thursday. This was Wednesday. The FOMC gave around more than actually 500 pips. I remember the pair pushed up around 500 pips as a result of FOMC. And then it is actually respected again this supply area that we had over there. So you can see the price trying to push downwards. Okay, the price is trying to push downwards. This is another a bearish engulfing. Okay, these are bearish engulfing, so it created another supply area. So we want to see how the market opens. Maybe the market will open and push upwards and then slightly, and maybe we see the price push downwards. But let's see what we have on the daily time frame. Okay, okay, so this was the daily time frame, right? So another thing that I wanted to hint here on the daily time frame is that we have this trend line. Okay, so we have that trend line on the daily time frame. It's good to be aware of it so that we can see how the price reacts. So if the price comes downwards, then we want to see the price reach this maybe trend line, and also as it respect this demand area that we have here, maybe push upwards again to this supply area, then maybe probably continue pushing upwards. Okay, so from the daily time frame, we can say actually we don't have like a break-in structure, because this was the previous low, the major low, and this is the major high that the price made. So right now it's trading internally. Okay, internal structure. So we go to 4-hour time frame. So from the 4-hour time frame, what we have, all this is in balance. Okay, this is in balance. So the reason why I want to see maybe the price come all the way to around this level, let's pull the Fibonacci. So we want to see the retracement. This was the lowest point, and then we take up to the body. Okay, we take up to the body. So I'm waiting the price to reach maybe around either 61.8% or 70% or 79%, either this level or this level. So these are the levels that I want now to see rejection of prices. Okay, I want to see the price now push upwards, because again from this level we have a resistant. Okay, this was the resistant on this side, and then there was the breakout. So the reason why we might anticipate maybe to see now the price come back to retest this breakout. Okay, so the best place to buy will be around these regions. Okay, these are the best regions to buy, either 0.618 or maybe 0.79. These are the optimal trade entries. Okay, optimal trade entries, areas that you can take, you can be looking to buy. Okay, areas that you can be looking to buy. So that is gold on the 4-hour time frame. So I'm anticipating a push downwards to this level, and then I'll be looking for buy entries around either at 2000. Okay, around 2000. If it goes slightly lower, maybe 1994, or the last point that I want to look at is 1988.73. Okay, so that's it for gold, because like you can see, this was the previous high and this was the previous low, so there was the breakout. So here we have change of character. So after this breakout of change of character, then we might be anticipating now the price to come all the way down here to retest this change of character, to retest this breakout here. Okay, so this side is resistant, then breakout, this side is support, right? But it might push slightly downside here, maybe to these levels, like you have seen using the Fibonacci retracement, maybe that level, and then we see a move on the upside. Okay, so if price does not make that move at that moment, maybe probably the other scenario is that maybe once the market opens, maybe we can see maybe a push on the upside. Okay, so but if the price is able to break above this region, okay, so then we shall be looking for an upward movement. The first level that we want to look at, it's around this area. Okay, so that's quite a huge trading area, 2088. Okay, so from 2050 to 2088, so this will be the trading area on the upside. But like I said, the higher chances or the high probability trade is that we wait for the retracement, then we look to buy at this level. So remember, we always buy at discount and sell at premium. Okay, so let's slightly narrow to 1 hour, but I really don't like narrowing to 1 hour, especially when you're looking at the what we call the weekly analysis, because you are looking at it in the longer term, that is within a week. So from the weekly, from the 1 hour time frame, again we can see now we have the trend is changing from the 1 hour time frame. This was the major low that the price made here before making this major high. Okay, so this level, what happened here now was the breakout. Okay, the BOS change in character. Okay, so we had a change in character at this level. So what you might anticipate now, the price is trying to create a higher, lower lows and lower highs. Okay, lower lows and lower highs. So trying again to cover this imbalance, but before the imbalance, maybe probably the imbalance is covered, we might anticipate the price to push up to around that level. Then we see the move downwards again to this breakout that we were looking at here, and it can extend probably to around that level before now we start seeing the move up. Okay, before we start seeing the upward movement. Okay, so that's how I am viewing gold from my side. So we look at Euro USD. Okay, we look at Euro USD. So with Euro USD, let's begin from the daily time frame. We see what we have from the daily time frame. So from the daily time frame, this is what we have. Let me delete this so that you can have a clear view of price. So from the daily time frame, that is what we have. So the price pushed upwards due to fundamentals, and then we see this move downwards again. So it reached this level. Okay, we had the price respect this level here. Okay, so that was a supply area. That was a supply area, the first retest here that led to this selling. And then we had the price push up again, respected this region. So what we are looking at the moment from the daily time frame, maybe it might form what we call the double top. So you have the first top, the second top. So what we'll be looking at to trade the double top, we want to see the price probably come down, break through this neckline. This is the neckline, and then a retest, and then we see price pushing further downwards. The first level that we want to look at, it's 1.05682. The other level we'll be looking at on the downside is 1.05196. and then we have this level here around 1.04752. Okay, so that is on the downside, right? Because here we have a very strong or a very high probability demand area, because here you had a break of structure. Then now this becomes a very high probability demand zone. Okay, so in case that does not happen, then we might be looking at price maybe probably reaching this level. Remember, this was the highest level that the price made, the major high that is under the daily time frame, and this was the major low. Okay, so there was this breakout. So we might probably then anticipate the price to be buying from this region. Okay, we might be anticipating to be buying from that region. That is when the price is coming to retest that area, and then we push all the way up to maybe around that level. Okay, we push all the way up to around that level, which gives us a risk to reward ratio of 1:3.37. Okay, 1:3.37. So it might play out that way. Or then we might see a breakout. Okay, we might see a breakout. Once we have this breakout, and then we'll be looking to take our sell entry to this level. Okay, we'll be looking to take our sell entry from this level. Then we have maybe a stop loss around that point. Okay, so I can push this here so that we don't get confused. So we can have this scenario as well. So whereby we take our entry at that point, we'll have our stop loss maybe around that area, and then now these will be no, that's a huge one, because I can have it around that point. Yeah, so we'll have a risk to reward ratio of 1:3. Okay, so either scenario can happen, so it's good to take what the price will give us. Okay, it's good to wait and see what the price is going to give us. But if we see rejection from this neckline, because here was the breakout, so we will be looking for buy entries at that level. Okay, so that is on the daily time frame. So let's look on the 4-hour time frame. So on the 4-hour time frame, again, you can see this is we have some form of imbalances here. The price is struggling to break through this point. We want to see how the price will react at this level, because we have a small zone around this level. But again, you can see on the downside here, we have on the 4-hour time frame, we have this demand area. Okay, we have this demand area. Okay, so once you identify the entry now from the upper time frame, this was the entry from the daily time frame, then you narrow down to the 4-hour time frame. You are trying to minimize now all this risk. So from the 4-hour time frame, then the higher chances that the price will definitely come all the way to this risk to reward, all the way to hit to this demand area, that is from the 4-hour time frame, and we want to see how the price will react from that area. Remember, again, here we also have this trend line. Okay, we have that trend line, so we want to see, okay, how the price will react. Remember, I said chances is that it might throw a wick now, because you have this trend line. You might want to see a price come through, then wick from up after it activates this demand area. Okay, so if you now go to the daily time frame, you find that now this becomes, now you have reduced the risk. We have 1:5.11. Okay, risk to reward ratio. So because you have narrowed down the entry from the 4-hour time frame. Okay, you have narrowed down the entry from the 4-hour time frame. So that's what we have from the 4-hour time frame. Then we go probably to the daily time frame, to the 1-hour time frame. I mean, to the 1-hour time frame. So to the 1-hour time frame, we might see price struggle to break through this region here where it is at the moment. So we might see some bit of struggle. Okay, so we want to see how the price will respond. So if it bounces off, then we'll be looking at this level that is around 1.09695, and then all the way to this supply area that we have on the 1-hour time frame, that supply area level there, and then probably now push downwards again. Okay, so I really want the price to come all the way to these levels for me to start thinking of now taking buys entries, okay? For me to start looking at having buy entries. So I want to see the price push down again to these levels in order to try and cover these imbalances as well. And then we push up, okay? So looking at GBP USD, we look at GBP USD. So with GBP USD, we start from the weekly time frame. Let me take another GBP USD that I've not really drawn so much. So we look at it from the daily time frame. So let me delete all this drawing. So from the daily time frame, this is what we have. Okay, this is what we have. So the price has been respecting. We have that trend line. Okay, we have that trend line. We also have this trend line at that level. Okay, we have that trend line. We can draw it properly. So we have the price respecting that trend line. So this trend line and this trend line, the one that is of high probability actually is this, because when you're trading trend lines, we want to take trend lines that have less gradient. Okay, so we always say that the steeper the trend line, the less probability it is. Okay, so probably we can work with these. We can work with the lower one. So you can see this daily candle, it closed very strong sell candle. Actually almost to a marubuzu, because we have very small wick on the bottom and a small wick at the top. So what I want to see is because here we have an area of what? We have a resistant area. Okay, we have a resistant area at that level, right? And the price is trying to break through that level. The reason why now I am looking at the price maybe come all the way to around that level 1.24970, okay, on the downside, on the downside. But if the price opens up and the price pushes up again on this side, because remember, we want maybe to take our fib retracement, we take from the body, okay, the lowest body there, to the body of the top wick. So the reason why we might want to see the price maybe push downwards, okay, to around this point before we see a push up. So I would want to see the price actually push downwards to around this level, okay, to around this level, okay, to around that level. So that is the level. Actually can zoom it downwards up to the body of the wick. So I'll want the price to reach to around 79% fib level, so that now I can probably look for a buy entry. Okay, so that I can look for a buy entry, and my stop loss will be slightly below those lows there, and then I'll be targeting all the way up. So I'll be targeting, this will be my first target, okay, and then I want to push all the way up to around this will be my other target, this liquidity, targeting this liquidity there, so giving us a risk to reward ratio of 1:3, okay. But if the price pushes downwards, further downwards, then that is if it does not respect now this trend line that we have identified here. So if it breaks through and there is a retest, then we might be seeing the price come probably downwards all the way to around this level. This area we have a very key level at that point, okay. So this was resistant, then there was the rejection again, then there was the breakout, okay. That was the breakout, this was the breakout candle, then the retest, and the price pushed up. So you might want to see the price maybe come down to this level and then maybe go up again. But this is a very nice level according to the Fibonacci retracement levels, okay. So, but if it does not respect, it has a strong bearish movement, then we want to see the price push downwards to this level, And then the next level that we want to see the price maybe on the downside, it's that level, okay, around 1.22121. All right. So we go to the 4-hour time frame. So from the 4-hour time frame, we might see some rejection or some reaction, slight reaction around that level because we have a zone around that region. And then remember again now from the 4-hour time frame, we have this demand area. Okay, this demand area was the demand for the change of character. Here we have the change of character. So this demand level becomes very, very high probability. How do you identify the high probability demand level? There has to be a break of structure, which happened here, and then the price has to strongly move. Okay, as we have to see this strong move from the demand area. Okay, this strong move. So higher chances is now that the price might come all the way to this level. So again, we can narrow down our entry. Instead of taking it from this level, then we can be waiting to take our entries around that area. Okay, and these now, if you go to the daily time frame, it increases our risk to reward ratio 1 is to 5.55. Okay, 1 is to 1.55, right? So that's how you narrow down to have your entries. So when we come to the 1 hour time frame, so like I said, you might see some bit of reaction. Okay, this would only be a reaction area, and then we see the price push downwards, probably to this to cover this imbalance and to test this 4-hour demand area. Okay, so that's what we have technically. So let's look at what we have this week fundamentally. Monday, we have no impact news, so we shall be trading purely on fundamentals, on technical, that is tomorrow. Then on Tuesday, we have the card CPI. Those are the major news. We have the card CPI for 30. So they are anticipating a decrease of CPI MM. They're anticipating a decrease of medium CPI. They're anticipating a decrease of trim CPI YY. Okay, so this means that if the news come out as projected here, then we might see CAD. Okay, we might see CAD weaken. So maybe probably USD CAD we might be buying. GBP CAD we might be buying. Okay, so anything that has CAD as quote currency, here we'll be looking for sales, for buys. That is if the news come out as projected, because the forecast here shows us that everything is being forecasted to decrease. So we know that if CPI decreases, then the banks will tend to lower maybe the interest rates. It will tend to lower the interest rates, and if the interest rates are lowered, we know that is negative for the currency, because the currency will tend to weaken. Okay, so we have GBP CPI. Okay, they are anticipating a decrease from 4.6 to 4.3, meaning that GBP might weaken if the news come out as projected. Then we have USD on Wednesday, consumer confidence. So the consumers are more confident with the economy, meaning that it might be positive for the dollar. That is according to the projections. Then we have final GDP, QQ, and unemployment claims. So again, final GDP, they're anticipating to remain the same, but unemployment claims are anticipated to increase, meaning that these might weaken the dollar if the unemployment claims increases from 2002 to 2015, or if we have a figure that is higher than the forecast. So it means that it will be negative news for the dollar. Then we have GBP, okay, GBP retail sales. So an increase here as there is the forecast. So if the actual comes greater than the forecast, so GBP will tend to strengthen, okay, GBP will tend to strengthen. Then we have the card GDP again on Friday, so an increase according to the forecast. So if we have a higher figure than the forecast, that means that the card will strengthen. And then we have now the core PCE index again remaining the same according to the forecast. And then we have the revised UOM consumer sentiment, again a slight increase. So if the actual is greater than the forecast, so we anticipate the dollar to increase in value, okay, to increase in strength. And always the rule is when the base currency is greater than the quote currency or is stronger than the quote currency, then we shall be looking to buy. If the base, the quote currency is stronger than if the quote currency is stronger than the base currency, then we look for sell entries. Okay, so that's what we have fundamentally. It is not quite that busy, but again, these are news that you cannot ignore, especially the CPI, the GDP, and the retail sales. Okay, so they are news that you cannot be able to ignore. So having said that, then we will come to the end of this market snippets. I'll be doing the last analysis on Wednesday. That is the midweek market snippets on Wednesday, and then we shall be breaking for Christmas to resume again in January. Okay, but during that period, actually, I'll take some time to prepare educational content for you come next year. I want this platform to be interactive as much as possible for you guys to understand, or for you guys to gain value from it. So I'll be preparing very high knowledge-packed videos. So ensure that you subscribe so that when these videos are released, you don't miss. Subscribe and turn on all notification. Also, you can help to sharing these links to your friends, especially those that are willing to learn, maybe to venture into forex trading. Remember, I have a beginner's forex trading course for free from from the beginner's level all the way to advanced level. So it's good to share this knowledge with one another. You never know the person that you might be helping. So always let's keep it interactive. Let's support one another where we can. And I know at the end of it all, it shall be successful. What I can promise you, 2024, two things will be happening: more of learning and also more of earning. Okay, so let's get prepared, and I believe all shall be well for us. So thank you so much, and I wish you a very blue week starting tomorrow. May it be a profitable week ahead. Thank you.